it's April 30th, 2019. This is a part 2 of the disastrous Google analysis video that I have posted yesterday. And guys, I have to tell you, I am highly disappointed. I mean, such a disastrous prediction. I say it goes to the all-time highs. This stock drops $100 after hours. Is all I get is a few hundred miserable negative comments. Look, I'm highly disappointed in all of you haters out there. Guys, you have to do a better job next time. Come on, guys. Only a couple of hundred bad comments. Man, you could have done better. But here's the deal, guys. If you're gonna do something in life, make sure you go all out. Enough of these half-ass negative comments. If you're gonna do it the right way. I sure thought I had a lot more haters out there, guys. And I know for those of you leaving all these negative comments, hey, it's cool. I understand you are not able to make your own analysis. As one of the guys clearly stated in the comments, he's tossing a coin every time he makes a trade. So, I mean, if that's your strategy, I understand you would have nothing to post on your own channel. Let's face it, it's just easier to do so. And unfortunately, that's what most of the losers do in life. They do what's easier. I mean, you get home, okay, and you're like, man, I know I got to go to the gym, but man, this Corona right here, this beer right here looks so damn good. So what do? You grab the Corona. Why? Because it's easier than going to the gym. Why do so many of you leave nasty comments? Well, because it's easier to do it. It's a lot easier to do than recording your own content, producing your thoughts and analysis, and share it with other people. So, with that said, the next part of the video is for those who want to learn and advance in their trading. Oh yeah, and I had multiple requests to take this disastrous video down. Guys, you should know this about me. I do not take bad videos down. Whatever I post stays on the channel. You take the good with the bad. That is just how I roll. This is the reality of trading. A closer look on specifically where I went wrong in my analysis, and more importantly, how can we learn from it and apply what we're seeing has taken place into our trading today. So in this video, we're going to answer some questions like how can we learn? Because if you are a trader, guys, especially if you're new, you should realize that you're not going to get all the trades right. Okay, there's going to be plenty of trades that you will get wrong. But the question is, how are you going to look at this? Are you going to take advantage of the situation and apply it to your next trade? So your next trade will be successful. So in this video, I'm going to show you specifically what I have learned from what I have gotten wrong and how I'm going to apply it next. Guys, now for those of you that just, so negative, okay, I just have one thing to say. You're wasting your time straight up leaving all the bad comments. Because trading is my life, guys, and I will never stop. I will never quit, and I will continue to learn from my mistakes each and every time in pursuit of greatness and perfection of my trading game. I've been doing this for 13 years. I've gotten tons of trades right. I've got tons of trades wrong. Guess what? It's just a part of the business. It's just a part of the trading life. And for those of you who think that you can get every trade right no matter what, you're not a real trader. So here it is, guys, the key takeaways of some of the analysis. I had a couple of people posting comments, well, looks like they're buying put options after hours. For those of you that are new to options, guys, on individual stocks, you actually are not able to buy options after 4 p.m. You can trade some futures on the indexes after 4 p.m., and you can buy options on some futures, but you cannot do it on individual stocks. So maybe they'll bring some clarity to those that are new, that are thinking, hey, I can just buy options after the hours of the companies announce earnings. That is not the case. And I had multiple questions saying, okay, so are they going to buy the dip in Google? What's going to be next? We're going to answer all of these questions. Oh yeah, but before we move into all the details on that, here's my favorite comment. I personally don't think it was a negative one. I think it was just fun, and thank you for posting this comment. For those of you who know, I've invented a 13 market moves formula over the years. And so this guy says, Tremblay. Okay, here's an excellent example of the 14th market move. It's nicknamed What the fuck? Okay, so thanks for the comment. I appreciate it. I had a good laugh. But here's what we're observing and how we're going to apply it today. First, let's see what exactly is happening. So, okay, Amazon reports earnings a few days ago. It misses on revenue. Yeah, it beats on earnings, it misses on revenue. What happens? Market forgives Amazon. This is how it looks on the chart. We're going to call it drop and pop. So here's Amazon reporting earnings, hits a low of $18.98, and what happens? It pops, it bounces. What happened to Netflix? Misses on the numbers. The market, what does the market do to Netflix? It forgives it. This is how it looks on the chart. Netflix drop to $3.26 after the earnings announcement. Then over the course of the next couple of days, it pops. So drop and pop in Netflix. Now here's Google. I mean, I don't know why they're hating on Google. I don't know why they're discriminating on Google. Okay, but the bottom line, Google beats on earnings, misses on revenue, and market hates it. So, being one of the last FANG stocks to report, could we actually use this as a sign in the shift of institutional behavior in the middle of the earnings season? So if we can identify this correctly, we can place multiple trades precisely, making a bunch of consecutive favorable trades. Now, let's take a closer look. What's going on? Well, guys, if you watch the video till the very end that I've posted on the Google, institutions are 90% bullish going into the earnings announcement on Google. I've pulled up the option chain and shown you clearly that the calls that institutions were purchasing in the expectation of a Google breakout higher, they were outnumbering the puts, like 9-1. And if you take, I've just selected a couple of more active strikes. For example, in this 1280 calls, institutions bought $5,507,000 worth of call options. Considering that Google is trading today at 11.93, 95 at the point I'm recording this video, they're going to take a $5 million loss. Now, that is just in the 1280 strike. Well, let's further take a look at it. There is a $6 million bet, over $6 million to place in the 1300 strike, close to $3 million in the 1310 strike. And, you can do the math for all the other ones that traded less than 1,000 contracts. It ends up to some phenomenal numbers on the call side, guys. In relation to the put side, these numbers are staggering. So institutions unanimously favored Google moving higher. However, there's some serious amount of money that's going to be lost on these call options once the market opens. So what can we learn from this? Let's take a closer look. Number one is what Google is going to do next. Let's determine that. So far this morning, here's a snapshot of what's taking place with Google. We're noticing a typical move 3 behavior, so clearly it's going to open with a gap down. And compared to the drop and pop in Amazon, compared to the drop and pop in Netflix, what we're likely to have is drop and drop, as it often happens with move 3. So these bounces, guys, as you can see, it tried to bounce a couple of times. Initially, it fell to like a level of, 1250, 1260, tried to bounce here. You can barely see that. Then kept falling, small bounce, kept falling, slightly bigger bounce right back to the 1210 area, drop. So this is just a characteristic of a very bearish pattern. Call it a move 3. And it's also confirmed right here on the accumulation. So typically, when we observe this, the probability of a drop and pop type scenario is greatly diminished. One of the reasons why is a lot of times when institutions come in and they buy the dips, you'll have a different chart, and specifically pre-market, you will see some volume coming in. And what we're seeing this morning is nobody coming in, and no institutional investors are trying to buy it. How can we verify that? Well, it's by looking at the volume. Actually, you can see it right here. So at 6:43 a.m., the volume in Google is only 13,862 shares. So in other words, There are no institutional investors that are in a rush to buy Google around the levels of 11.92, 11.95. Nobody is in a rush to do so. That is a bad indication going into the open, because if nobody wants to buy it at $100 less, then look, we're likely to head into a drop and drop-like scenario, which is exactly what we have been observing, right? So far, when we're trying to study these behavioral patterns during this earnings season, the predominant behavior has been in the stocks that actually drop after earnings. Typically, in many earnings seasons, we see if the stock drops after earnings, institutions will come in and they'll buy the dip. Well, the unique characteristic of this earnings season has been such that if the stock drops after earnings, it actually continues to drop the next day. So we don't expect the dip in Google to be bought here, not at these levels, at least observing the volume pre-market and the chart pattern on the 1-day, 1-minute chart. We're not really seeing any buying happening at these levels, which tells us that Google is likely to drop more before we see any buyers starting taking some bites and accumulating their positions. Here's how the Google chart looked. Let's evaluate what was wrong with the analysis. 90% of the things that I pointed out in the chart of Google yesterday, both daily and weekly chart, was actually bullish. The call buying volume was extremely bullish. The top information was rather bullish rather than bearish compared to the prior top. Guys, but what can we make out of this? No matter how bullish this setup was, the highest probability trade right now is to short the top no matter what. Now, I have made 3 specific observations or generalizations to help bring this trade to light. So here's what I've recorded, right? If the stock has run up 30% plus in the last 4 months, if this condition is met, then it is a part of the recipe for shorting the top this earnings season. So let's review it on Google, because later we're going to make this projection to some other trades that we're considering today. So what has happened since December? Google from under 1,000 goes to $1,300 roughly. That's a 30% increase in the share price. Checkpoint. Now, number 2, if stock faces long-term resistance level that coincides with the top. Okay, so here's long-term resistance of Google was just under $1,300, so it makes a run at it. It fails. So now we have 2 conditions met. It tries to take out the previous stop. Regardless of all the bullish behavior institutions, it fails to do so. That's condition number 2. Condition number 3, if buy volume is lower in relation to sell volume, if we compare it on the sell side when all the stocks were dropping in November, December. So let's go back to this chart. Let's see what we're seeing. Here's October, November, December. Do you see this large volume bars on the sell side? How do they compare to the buy side right here in the last few months? Well, clearly these exceed this buy volume by a great extent. So these are the 3 conditions that we want to observe in the chart in order for us to make a decision to short it this earnings season, despite of how bullish some of the other things could actually be. So we're considering CHTR 380 puts. So pre-market, CHTR is actually trading at a level of 372 so far. The reaction, even though it missed on some of the numbers, it actually missed on earnings, slightly beat on the sales number or the revenue number. The stock is up. So how are we going to trade it? We're going to take a look at the chart. One condition is met. The chart of CHTR shows us the price is up more than 30%. Look at this. It goes from 270 in December all the way to 370s. Okay, so one of the conditions that we've underlined utilizing the Google chart going into the earnings was it appreciated 30%. This condition is met here. The other condition is that it's running against some significant levels of resistance after making this 30% move higher. So here's your top. 1, 2, 3. Second condition is met. Third condition. Look at this huge volume right here in relation to the buy volume. third condition is met. What are we looking at? Targeting the level of 350, 355. As I keep mentioning in every video, we want to short stocks on the bounces, not the lows of the day. So CHTR weekly chart confirms this huge resistance level at about 380. It confirms the higher sell volume in relation to the buy volume. So all three conditions are met. Therefore, as it moves, hopefully higher pre-market when we go into the market open. If it goes in about 380, we're buying 380 puts on this name. Considering CMI 170 puts on the bounce. Now, so far, the stock reported earnings. They're no here, no there. I mean, nothing really going on. CMI is tied to selling a lot of engines for the trucking industry in China. But the stock has run up substantially. So far, again, we're not having any sort of reaction. It's just sitting there. The reason I wanted to bring this one to your attention, guys, is because if it's going to open pretty much where it closed yesterday, the options are going to take a serious hit on either side, both sides actually, the call side and the put side. And you can buy this one very, very inexpensively. So if some of you working with a small account, you're looking to get some traction, but you don't have a ton of funds to be buying like Amazon calls or puts, this one you should be able to pick up at the market open very inexpensively. And generally, CMI is capable of some pretty significant move, like a 10% move, 8% move in earnings. Pretty normal for this thing. So like a $10 drop is something that this thing can easily accomplish at some point throughout the day. Now, again, the strategy is not to buy it when it's dropping, not to buy puts when it's dropping. The strategy is to buy puts when it's moving higher. This stock historically does have a very high probability of a reversal. So if it does pop on lower volume when we're going into market open at 9:30, this would be a good one to play the reversal, especially your options are going to be very inexpensively, and it is capable of some big moves. As you can see on the weekly chart, look how huge these moves are. And typically, once this thing pick a direction, they have a tendency to move in that direction for multiple consecutive days. So this is a good trade for maybe some of you guys that are not working with a day trade account like 25K, because once the reversal takes place, it's going to stay with that direction for multiple days, as you can see from this chart. Once it's moving higher, it's moving higher. Once it starts dropping, it's starting to drop. And you see how precise this reversal points, right? Here's your bearish reversal candle, then it drops 3 days. Here's your bearish reversal candle, it drops for a few days. Every time you see this bearish reversal candles, it's dropping in the same direction, which is exactly what you need to profit greatly on trading weekly options. You want that thing to just go in the same direction consistently over the course of 2 or 3 days. And we're noticing the reversal candle here. So if it goes against that 170 level, that would be a good entry, considering a target price about 155, 156. Takeaways, shorting the top strategy is the highest probability now, irrespective of how bullish institutional investors are in some names. Google was a good example. Short the bounces that happen on low volume. Pay very specific attention to when stocks go higher. Are they going higher in lower volume or higher volume? Start observing the stocks that you're considering trading that day pre-market. Measure their volume at 6, 7, 8, 9 a.m. and see if the volume is increasing or decreasing. And study the prior day's volume to understand whether this volume today indeed is lower or greater than the general average volume of that stock you're looking to trade over the course of the last 10 days. Now, interesting fact, Amazon fails to maintain that 1950 level yesterday. At the same time, you know, the magic number we're watching yesterday was this, 2946.75 on the S&P futures. So at the same time, Amazon fails to maintain that 1950 level. So does the S&P futures. They fail to maintain this level of 2946.75. So that tells us that the probability of a bearish reversal is increasing. Further bearish moves to develop. Hey guys, congratulations, made us this far into the video. Clearly, you are trying to become a better trader. You are trying to learn. If you have any questions whatsoever about trading stocks, options, futures, anything about trading, click the link below this video. Schedule a 20-minute free coaching session. Ask any questions you want to bring some clarity so you can trade fearlessly tomorrow. Trade fearlessly. We are about to conquer this market. Let's rock. I'll catch you guys in the next video tomorrow.